afternoon, 3 p.m. Saturday. If you got nothing to do, I have something for you, and we will talk about sales tax. Who doesn't know about sales tax? When we look at our receipt, we see sales tax, right? So this webinar, however, is designed for business owners who are just sitting there wondering about how necessary sales tax is, why sales tax, can I not pay sales tax? And if I have online business and I do it on Amazon platform, do I need to worry about sales tax? Let's just cover all of that. So it is a talk in 60 minutes, everything potpourri of sales tax. All right, before we start, I'd like to lead you into my other things related to it. It's important. And one of those is our website. I want you to know communitycpa.com website. This is where you can come to make appointment online with us. So you don't have to be living in my neighborhood. In fact, we have 4 locations. So whichever location you are at, it's okay. But even if you are from a state, we don't have office there. You can still click appointment and go get hold of me right here. And you can make appointment with the following partners. And we do have our own specialty areas. And you will choose us and we'll come online to talk to you. The other things I want to mention to you is about our YouTube channel. Our YouTube channel is amazing. It's a collection of knowledge. I will tell you that, of course, we take knowledge in different ways, right? Some people like to listen. Some people like to read. Some people want to listen to Shakespeare kind of English, but some like to listen to Chinglish, just like the kind of English I present. And we don't try to be sophisticated. All we want to do for you is to explaining everything in Chinglish way so you actually understand. I'm not perfect in English. English is my second language. I try really hard to sound like a real English speaker, but it's failed for the last 50 years, so it's going to continue to fail for the next 50 years, so I'm not trying. I will just try to make it simple for you. You see our YouTube channel and all of this knowledge, if you listen, if you just drive, log on to YouTube, Community CPA channel, and pick a topic, you can select that right here. For example, you say tax saving, who doesn't want that? And you click tax saving, there comes a bunch of webinars that I have done from the past. A lot of those are still relevant. I know some information are very sensitive to time, but tax deduction, tax saving in general are pretty stable. So you can actually find relevant webinars, then you can listen while you drive. I promise I won't put you to sleep because I don't speak that kind of boring English to put you to sleep. So you're safe on the road. You can listen to me. All right, now I am going to start with our presentation, and we designed for today. And let me get the presentation start in the presentation mode. I actually don't really know how to get that to presentation mode anymore. Derek, can you help me because I can't do it? Derek, I cannot get onto presentation mode. Just bear with us. I normally would check this, but today I forgot to check for presentation mode. Oh, right there. Yes. Okay. So now let's get going with sales tax topic, right? And when we post our webinars into the YouTube channel, and the glitches like that, it will be eliminated. So you're not going to be driving and realize that I can't get onto presentation mode. And it just happens in real life. It doesn't happen in afterlife presentation. So with that, you can see we focus on sales tax today. And the sales tax is a state tax. So it is not like we can summarize all the states for you, but we use some states as example for you. And knowing that when you deal with certain states, you're always going to pay a little attention to that particular state, make sure you understand the state requirement, right? And my name is Ying, and I am the CEO and the managing partner at Community CPA. I served on the Federal Advisory Committee for 3 years, and I also have this book already published in 2019, and it's called Appointment with Ying at 8 a.m. And I have 4 books in the row to come out. 8 a.m. is the first one, is how to start a business, and the 10 a.m. is the second one, and it's called Growing Your Business. So I finished the second one, so it's going to be published this year. And the third one is 2 p.m. is merger and acquisition. So stepping up onto your business, right? Or, planning for exit. So that third book is 2 p.m. and I am working on that third book. The last book is 6 p.m. that will talk about the retirement, how to retire from your own business. With that said, and you understand why I have these 4 books, because I'm trying to make out a business process for an entrepreneur. And if you want to start, that's at 8 a.m. If you want to retire, you go to the 6 p.m. All right, so this is my 10 a.m. book is coming out. No responsibility disclaimer as always. This is a free webinar. We're not formation a client and a service provider relationship at this moment, but I, of course, would love to have you come into our firm. And we are one of the strange CPA firm that we are hungry for business. Unlike so many other CPA firms right now, they will politely tell you, we don't take new clients. We never would say that to you because I know our new clients are our tomorrow. When you are new in business, you have innovations, you have creativities. We want to draw that into our business as well. We like creativity. We like innovative business because we can help you to grow. All right. And understand sales tax. Sales tax is what we call the pass-through tax responsibilities. It is the government money, right? They trusted you to collect it from your customer, then they want you to turn around to submit it to the government. They don't want you to turn around, submit it every day. They want you to submit it annually, quarterly, monthly. So they do trust you for a little bit of time to collect that amount. So this is where I want you to understand sales tax. It is not the same as an income tax. You see, when you made a profit, you pay income tax. Income tax is more of a responsibility of the business and the citizen, and we support the White House lifestyle, right? That's your income tax. But your sales tax is actually passed through taxes, and it belongs to the state government. It's called a trust fund. As soon as we talk about trust fund, that means what? That means if you collected on the sales tax in your business and you don't pay it to the government, and you say that, well, I closed the business and I no longer have the business, so I should no longer have the tax liability. You are wrong. You will continue to have that tax liability until you sell your bedroom furnitures. I'm talking about liability all the way follow you to the tombstone, so you don't want to not pay sales tax. There is another tax is the same nature as a trust fund. Do you know which one that is? Payroll withholding. That is the same nature. You can't bankrupt that out. And you got to be so in debt with the government. They're going to chase all the way to your estate. If you have a house, they wait for you to sell your house. They will still get that money. So no kidding. Sales tax is a real liability, and even if it is a sales tax for business, it's still your real personal liability. So you want to make sure that you collect it. It's not part of your business profit. Okay? All right. how to calculate sales tax. This is very silly. When I say how to calculate, of course you know the answer, and you use the percentage and you look at your sales, you got it, right? And some people will say, what do you mean? The machine does it for me. Why do I need to worry? All right, these are all correct answer, but I want to give you one small example so that way to draw your attention. So if you made $100 sales, and you collected $100 from your customer for a sales tax taxable sales, okay? So let's say your sales tax rate is 8%. So I want to know, what is your sales tax for that $100 sales? Are you going to tell me $8? You are wrong. And it is actually should be $7.40. So look at the middle of that slide. I had an example, and I just want to show you what that means. So sometimes we have clients years and years was calculating on the $8 method, but actually should be $7.40. Then there you oversubmitted 60 cents. Well, it is 60 cents if it is $100, but if it is $1 million, it's $80,000. So it is really different, right? It's different than what the amount you have, but please make sure you calculate it correctly. I will tell you that in our practice, this is probably most often seen mistake of our client who told us that I will do my sales tax, Ying, you do my income tax. Of course, okay. But then when we work on their income tax, trying to place the right amount of sales with the right amount of the sales tax they submitted on the tax return, we realize that they're overpaying taxes. So, and another comments I want to make, you know how small business owners, trying to save money and we don't, we can do it ourselves. And we can really guess what expenses that is. When you do that, I will tell you, the reality, my reality inside of Community CPA shows that our small business owners always underestimate their expense. Always underestimate. That means they always overpaying taxes. That is how ridiculous that is when we are not doing proper accounting, not doing proper calculation, and thinking that, whoa, I saved $50 service fee out of this, but yeah, you overpay hundreds, thousands, 10,000s at a time of these taxes you should not be paying. So our encouragement to you is that do it right and really learn what is the right way to do. So I'm telling you what is the right way to do right now, right here. So there are 5 states without sales tax. When we say sales tax, like the general sales tax, I'm not talking about the local, okay? So the general sales tax, they don't have it. And, those are the, it's abbreviated as a NOMAD, N-O-M-A-D. So these are the states, New Hampshire, Oregon, Montana, Alaska, and Delaware. So it's like NOMAD, nomad. It's like these 5 states, they don't have general sales tax. So if you sell things to those states, you know that you don't have sales tax, but you may want to look into the local sales tax, because I gave you example that in Alaska, town of North Pole, they have a local tax 5.5%. If you go there, buy things, visit there for Northern Lights and this July, and you will be paying that 5.5. All right. Now I want to briefly cover 3 states, Iowa, Minnesota, California, because we have branches over there. And I just want to highlight a couple of things, because in Iowa, we just had a recent regulatory change. So the quarterly sales tax is no longer exist. All the sales tax are filed, monthly, or you file annually. If you think you can, if you file annually, that means your collection of the sales tax is less than $1,200. So with that change, you know that you need to pay attention. If you used to file quarterly, it doesn't exist anymore since July of last year. So make sure that you switch to monthly filing. So this is the highlight area I want to mention. Minnesota has this really a special treatment on the sales taxable item, and normally if it is delivery charges, like in Iowa, is not imposed on sales tax. But the Minnesota says that if your sales total, if your invoice total is including the delivery or installation labors and things like that, then your total amount subject to sales tax. So you cannot break out the labor goes, my labor is not subject to sales tax. And that is how you can do it in Iowa, but you cannot do that in Minnesota. So your service charge, your tips, your installation labors, those are all not going to be excluded. It's going to be part of your bill. It's going to be part of taxable for sales tax. All right? And so we also listed the schedule because Minnesota do have a quarterly. So that one is if you have 100 to 500 per month, and then you do it quarterly. So this is what we can provide you, so you kind of know. Oh, Iowa doesn't have quarterly. Minnesota has quarterly. So, especially when we have branches in these states, and we're very much into making sure that our staff knows the difference, and we understand how the invoices, how you produce invoice will make difference for the sales tax calculation. And California sales tax. California, one thing I want you to know that, normally in Minnesota and Iowa, you have general sales tax, then you also have local. And in California, it has the state general sales tax. It also has the local. And one other one California has is a district tax rate that also apply. So by district. So you want to, if you open up a business in California, you want to inquiry of all three authorities, agencies, to make sure that what rate they have. But if you open up a restaurant in that local area, the POS company, they would know. They would set up your POS already taking care of your sales tax. Of course, you want to double check, make sure they did set up. There was one time, not very often, there was one time in Minnesota, we discovered a POS system that was setting up the sales tax incorrectly for Minnesota. And we think because that company, that restaurant was this POS system's first Minnesota client. So the rate was wrong, the setup was wrong. But normally, if you have a local POS company who comes in to do your POS system, and they probably should already studied what kind of sales tax you have, should already apply. And some of those exemption for sales tax, I know I listed under California, but it's sort of applied to a lot of states, which is the sales of certain food products for human consumptions, right? And the sales to U.S. government, special. Sales to prescription drugs, and the sales to food stamp items. Like if you can buy that with food stamp, that normally don't have a sales tax. All right, now let's talk about sales tax on internet sales. I know this is a very new and a confusing area, but I want to break that down for your understanding, and at least you know where to look for answers when something come up, right? And the remote sellers, and this is like so-called remote sellers. It means that you have the sales to the local customer. Say, for example, if you are an Iowa company, and you sell to Minnesota customers in that state, but you don't have anybody working in that state, you don't have an office in that state, and you might just have transaction to that state. So those are remote sellers, right? And, remote sellers subject to sales tax collection in certain ways. There are some rules I will introduce to you. So our most frequent asked questions from our client would be that, oh, Ying, I sell quite a bit to Nebraska, and should I register for Nebraska sales tax or not? Is that should I do that? When should I do that? So the determination as to where you are required to register to collect and remit sales tax is actually based on where you have established Nexus. I know this Nexus word. English is my second language. I absolutely don't know the word of Nexus. Before this sales tax become such a litigative matters on the internet, like Wayfair, a lawsuit litigation with Supreme Court, the decision that was coming out of that. So this Nexus become a thing. So I actually listed a couple of things for my audience, because a lot of you are like me, English is a second language. So let me just explain about Nexus, the word of Nexus, Nexus, okay? Nexus equals to substantial connection. It's just the word for substantial connection. So if I create a sentence over that, I listed one, will impress you, so you will remember. And an angry wife yield to a guilty husband. That happens, right? That happens. So what did she say? She said, there is a nexus between you and your mistress. You see how that word was used? There is nexus between you and that person. So that means she's saying that you have a substantial connection with that person I don't like. That's what she's saying. So it is substantial connection. School cafeteria is the nexus of student activity. So that's where the activities were born, and then students will get together. So it's nexus of student activity. Today, Facebook seems to be the nexus of communication. Facebook seems to be a lot of communication vehicle for a lot of people. It's a substantial connection, all right? Amusement park district is the nexus of the city attraction. And apparently, maybe dissenters didn't think so. So that's what happened with Disney, just in my opinion. And with that said, I think I impressed you with the definition of nexus. So now let's look at how sales tax is surrounding this word. Remote seller nexus, okay? So there are four nexuses, and you identify with the remote seller. We already know what is remote seller, right? Because you're not there, but you're selling it to there, so that you're remote. And you're a remote worker because you're not at the office, but you work from home, remote worker. So remote means that we're not there. But even if you're not there, you might be liable to collect sales tax, remit sales tax to the other state. So what are these? Click-through nexus, affiliate nexus, economic nexus, and the marketplace nexus, okay? Now, let's go through each one of them. Click-through. I have an example here for you. So click-through, I made the company up, so I want to make it more direct for you. Then after this one is a more of a general, the other nexus explanation was more of a general definition, but this particular one, I want to go through people's name. So if I were a company contracted with John, an individual works from home and located in Minnesota state. So an individual who has a house in Minnesota and work for company A, who is Iowa company in Iowa. John and his company refers potential customers to Iowa A company through a web link for commission or other consideration upon sales. Iowa A company is considered to maintain a place of business in Minnesota. Even if Iowa A company doesn't have a substantial physical or economic presence here, this means that the sales Iowa A company makes through referral program and affiliate links are taxable. So basically right here, what happened is, John is a Minnesota resident, and this is Iowa company. Iowa company said that, hey, John, if you just sell my windows for me, and to Minnesota clients. And every sale you do, I'm going to give you 10% commission. So you're paying John on the commission. By doing that, you established click-through Nexus. So your sales tax you charge to that client, to that end user, that window got installed on that house, that should pay Minnesota sales tax. Make sense? So most popular threshold for click-through Nexus is more than $10,000 in receding 12 months. So it is like the next 12 months. So if you are in, like right now, we are in 2023. So by now, you already reached 10,000. That just means you need to register in Minnesota right now and get your sales tax collected and remit sales tax. And you may say that, oh, Ying, what if I registered it and remitted once, then I never really did it again? What's going to happen to my registration? You can either file 0 and hoping that you got more clients for that state in the future, or you can simply just close the permit and then not to file anymore. So it's not a big deal, right? You can literally do that online. And so, but one thing we want to mention is the pay per click, banners, and other advertising do not qualify that kind of taxable income if the payment is not contingent upon sales. So, if you just click here and you pay $5 and those are not related to the sales in Minnesota, so the Iowa A company doesn't need to establish Nexus within Minnesota, apply for registration. Affiliate Nexus. So it varies state by state. This is the one that has a lot of flexibility or maybe different way to define that. So I pull out California for you just to get a feel. Affiliate Nexus may be established in California when an out-of-state seller, like say Iowa A company, has ties to businesses or affiliates in California that engage in certain activities in the state. That includes having a representative in the state to assemble, deliver, install, sell, or take orders for property for the item. Here, the property just means the merchandise, the item. Or being a member of a commonly controlled group that helps the seller establish or maintain a California market for sales of tangible personal property. Tangible, touchable, something we can feel and touch. And personal property, like jewelries, cabinet, things are tangible, right? So, like merchandise, things you can feel and touch. So that's California. You see, the definition is pretty general. So let's say if you just end up feeling like making too much sales in California and having some helps over there, you're not sure whether you're qualified for Nexus or not, this is a perfect consultation work that you can hand over to your lawyers, to your CPA. Because they are the one who will make a determination, then you can follow their determination. If an affiliated person of the company A, Iowa A, with a physical presence or employee or agent in that state and has sufficient nexus in the state to require the retailer to collect remit. So what it says is that if company A and has an employee or agent in Minnesota, that is already established a nexus. So the sales tax need to be remitted. All right, number 3, economic nexus. This is the most understandable one, and a lot of benchmark are first benchmarked over here. But I would say that if your W-2 has employees from a different state, you already established the nexus. You really do have to count your sales tax and income tax in that state. So economic nexus, generally speaking, correlates with the set level of sales or gross receipts activity within the state. Let's say Iowa 8 company in Minnesota. So it's related to how much sales that was in Minnesota. So we can register for sales tax registration. So Minnesota, 100,000 in gross revenue or makes more than 200 separate sales transactions. So even if you have, let's say if you have 200 sales transaction, but your total is only $5. I'm just give extreme example. In this case, you're still subject to Minnesota sales tax because you qualified for one of those. So it is 100,000 or 200. Of course, it says over the previous 12 months. So you're always going to look at your 12 months, consecutive 12 months to see whether that is over. As soon as that is over 100,000 or 200 transactions, you immediately start paying for Minnesota sales tax, right? California, more than 500,000 in sales of tangible personal property, merchandise, in the current or prior calendar year. You see how each state is different? This is why when you get involved with online selling, as soon as you grow, you really need to be careful with your sales tax. So California is by previous calendar year or current calendar year. Now, point to consider for economic nexus. So you want to make sure you always check the threshold because the state would have a legislature sessions, then they change the rules. You know, the rule I put out last time when we talked about sales tax is already not the same as this time. And I don't think it was a lot of time in between. It was maybe about 8 months. So it's already changed. Check threshold all the time. Look at your sales footprint. Always know where you're selling. If you're online selling, you should have something to show that what you sell in each state. And research the state requirement. Don't assume. Even if you are an Iowa company, don't assume every state is like Iowa, okay? And make sure you know whether your location subject to the local sales tax or not. Because local sales tax is not the same as a general sales tax and is tapped onto the general sales tax. So make sure that you do not forget about local sales tax. All right, marketplace nexus, which is the last one for nexus connection, significant connection. And marketplace, you can easily think of the businesses sell their goods to buyers all over the country on a marketplace platforms. So what are they? You know Amazon, Etsy, and or you set up a website and you give it a name and you're selling it on the website. That is a marketplace, and you established significant relationship, so marketplace nexus. And what's important to remember is if you have a marketplace like Amazon, other people are uploading, individuals are uploading onto your place to sell, do you know that you are the one holding the platforms, and you are the one supposedly collecting sales tax, remitting sales tax to different states. The states are passing what are called marketplace facilitator laws. So they call you the marketplace facilitators. Even though you're like, I am just doing the website and, helping my small businesses to have a place to sell their stuff. And I'm just a place that, I help people. Yes, you got promoted just now. You are the marketplace facilitator, and you receive the burden of collecting sales and the use tax from your individual participants and from your customers, and remitting that to the state. If an online marketplace operates its business in a state and provides an e-commerce infrastructure as well as a customer service, payment processing services, and a marketplace facilitator is required to register, collect for these people. And this could also impose reporting requirement on the marketplace facilitator. So this Nexus is really a big one. For the one that like Etsy and Amazon, they already did. And I know that when you go on there to buy things, you pay sales tax, right? And they use your home address delivery place to calculate your sales tax. And if you change your delivery place to a state that has no sales tax, like the nomad state, and then you're just not going to pay sales tax, right? So that is how it works. Point to consider. The marketplace facilitators such as Amazon, and so they may handle the bulk of sales tax collection remittance for you. When work with these third party, we want you, the successful small business owners, to really check your statement from them. And I'm making sure, so if you know that this customer who ordered $10,000 goods from you is actually in New Hampshire, and then you really should not be paying sales tax. Just make sure you look at your statement, would you? So you need to know the law, you need to ask the question, you need to verify accuracy. That's on you. And that will save you a lot of money because they take the sales tax already from your sales. You don't get it. But if they took it incorrectly or inaccurately, wouldn't you be sad? I would be sad. I would study their statement. Reporting requirement for the retailer, and you need to, as a retailer, and when you are selling to another state remotely, you need to notify the buyer that they must pay and report state use tax on their purchase. So let's say you don't fall into any of the Nexus. It was just out of the blue moon, and you just had a out of state sales. No problem. You need to notify them to pay. But if they're in nomad state, then you don't need to worry, right? And retailer may be required to send purchaser an annual statement to the buyer of all of the purchases they did to inform them that these are the things you bought from me. Add together, you probably owe about $5 sales tax to your state, use tax to your state. Please remit. So those individuals, they don't remit sales tax. From their standpoint, when they receive your merchants and did not pay sales tax, let's say I ordered something from you, and you sent it to me but didn't charge sales tax, and my residence is in Iowa, then I would remit use tax because I need to pay sales tax for things that I use in Iowa. So that would be use tax they need to submit. If retailers ship item into the state where it doesn't have Nexus, so which means that below the threshold, no Nexus, no tax should be charged by the retailer. You don't need to charge the sales tax, however, and you should notify the buyer to pay use tax. That is the reporting requirement. I just want to mention that to you, okay? And a practical example, these are good ones. Let's go through. If Iowa retailer ships item to a customer in any other state, they will be required to register and collect sales tax if they have Nexus in the state into which they are shipping. So you see, you have to know ahead of time whether you have Nexus. If you do, and you charge. If no sales tax Nexus, it's too small, occasionally, no big deal, the retailer should remind the buyer that the use tax should be remitted at the time they receive your shipment. See? Best practice, okay? Example number 2, if you are making online sales and you are using a packing warehouse to fulfill the order, and you may have Nexus for sales tax purposes in the state where the packing was done. That happens. Sometimes you have your warehouse in West Coast because it got shipped it stayed over there. Then you actually got orders here in Iowa and the 2 Iowa residents. Then it's packed in California. So that California facility actually have Nexus. So you would charge sales tax. All right. The presence of inventory in a state creates Nexus for not only sales tax, but also income tax. So same example, if the inventory stays in California, you're shipping the inventory out to different states. That inventory generates sales, right? So the sales need to pay sales tax just because when you ship that over to the state, you have Nexus and you need to charge sales tax. But your income tax also come around. And because that inventory generated profit, so you need to pay income tax for that warehouse. So with a warehouse, you pretty much are looking at both taxes to be active, right? And a practical example number 3, if you are selling software as a service, the sales tax is also usually billed based on the state you ship to. There are states don't charge software as service a sales tax. For example, Minnesota. But there are state charges software as a service. For example, Iowa, right? So you want to make sure that, if you let's say if you subscribe to QuickBook Online and you are a company in Iowa, then if you buy the QuickBook Online monthly subscription for $100, then because you are in Iowa, you're going to pay sales tax on that. So the QuickBook actually charges you for sales tax. You will see that on your bill. So it's not $100, it's maybe $107, right? But if you happen to be in Minnesota and the QuickBook will send you an invoice, but that sales tax will be not on there. So it will be $100. So that is what we say about software as service. So whoever uses it, the location, that's where the sales tax rules applies. Not every state has the same rule. So again, you really do have to study, right? Just make sure that you ask questions when you get a bill. I mean, some of the company don't have a lot of software as a service kind of expenses. We have clients, they are software as service bills every month is over $500,000. But if you have that much of this kind of service, you care about sales tax, right? And, you would set up your company in the state that don't charge this 8% on you because that's $35,000 a month they're paying. So it is important to understand why you get charged, how you would not get charged. Right? All right. What does sales tax look like on my books? That is a common asked question because when we file income tax for our client, we reconcile the sales tax you remitted to the state with the taxable sales amount because we need to know that your sales tax was correct amount for the year and your sales were without sales tax in there. Because basically, the profit is calculated, like I wrote here, is total cash and the money you received minus sales tax, right? So your sales minus sales tax, that gives you leftover. That leftover you reduce by your rent, salary, all of that, you come up with a net profit. So you want to make sure that sales tax is not in that calculation because the sales tax is not yours. The sales tax is actually government trust fund. Doesn't belong to you. Should not be counted into your total sales. Also should not be counted into your profit. So you will find a way to make sure that your total sales, is the amount that you can reconcile which part of it is the sales tax collection. Because we are getting those merchant account. They send us a 1099K, and in there, they have sales amount. They also have sales tax. They also have tips and the stuff if you are a restaurant operator, and you know that your sales include all three of them. So in our practice, when we work with our clients, we break them down. We show the sales, we show the sales tax, we show the tips. The reason we break them down to 3 categories because the sales tax need to be reversed with the sales tax they paid. The tips need to be calculated carefully so they can get tips credit. Then the sales need to be correctly stated so we don't double dip, so we have a correct profit number, then we can pay the correct income tax. Makes sense, right? So that is the best practice. So here, this particular slide, we were just saying that you want to make sure that if your business has a physical presence in a state with a sales tax, you must collect sales tax from your customer. And if you don't collect it by mistake, you forgot, and you still have to spit that out as if you collected. That's truly the case because we have handled cases like that, and the customer, our client just didn't know their service is sales tax taxable, so never collected sales tax for 10 years. Then the state come around and charge 10 years worth of sales tax by using the sales tax by sales amount reported on the income tax, a huge amount, over $600,000 in sales tax, and I mean, yeah, that's a true story. My client actually died before even finished paying the taxes. It was very sad, but just to say that you must collect. Regardless, okay? Don't tell me you didn't collect. Even if you didn't collect, you still have to pay. You're just going to cut into your profit for that many percentage and give to the state government. But you must also record the collected sales tax in your book. So you should pay sales tax out of account payable. So that way you always have a clean track record of what you're doing, all right? And if a seller charges your sales tax and you must record the sales tax expense in your book, what I'm saying here is that sometimes even you are in business, you pay sales tax yourself as well. And that sales tax you paid doesn't really offset the sales tax you collect. It's actually just your expense. So you just book that into your expense, okay? My last slide for the day is about audit. I touched on a little bit on it. I have this, I always felt really bad about that particular case I did. The taxpayer, 10 years, did not collect sales tax, but he always performed the business. It's actually a nail shop. It's a nail service business. And he was one of those pioneers who started that business in the state. And a lot of people followed him. But when they just started, they didn't know it was sales tax taxable. So what he did was he would charge a flat fee, $50, $40. So all of his income is kind of like rounded numbers and his flat fee. So he got audited, 10 years didn't pay sales tax. So what he has to do is he has to back into his number, calculate every sales tax that he's supposed to collect and did not collect, and becoming a huge sales tax liability for him. And he actually, when I met him working on the cases, he was already stage 4 cancer, liver cancer. So 6 months later, he passed away in a hotel, and the case was still going on. So I would end up working with his spouse who doesn't even speak English. So it was quite a sad journey, and don't want to see any entrepreneur end up in that kind of situation. Then it actually went into his estate, and the particular taxpayer don't really have any estate, but if he has, it will be used to pay sales tax because it's a trust fund, okay? So the government does a lot of audit for sales tax. For example, in Minnesota, and several years ago, they have really focused on POS system, sales tax collection from the restaurants. So there are fraudulent activity going on. Someone produced a POS system, would hide sales tax collected. So those are being discovered by the government. Everyone who got that POS system got audited. So it was a huge undertaking, but it's also a way for the government to implement rules and regulation educate taxpayers, right? So I want you to know that the state has unlimited authority and to track you down and to get your sales tax. It's a trust fund. It is not yours. And even if you didn't collect it, you still have it. So it is like there's no win. And if you get audited on sales tax, and you better have all of your ducks in a row and you have your sales, you can show the right rate, you can show the right local tax is being imposed and collected, and there's a lot of things that you can do. And it is not burdensome. If you got your system set up to do that automatically for you, then you can have a relief and you don't need to be so bogged down with calculating every transaction individually, right? So keep a good accounting system and a record keeping. Use reputable, more integrity in the POS system, the better that is for you. You want to make sure that you work with reputable company. I always say that if you work with outside people to make a certain decisions, and the best way to do that is to do it with professional firms that's on the market for a long time. Your brothers, sisters, and someone just opened up a tax shop, they're not the good place to go just because they may not have that practical experience. They may not have experienced what we have experienced to tell you that from our heart. Because if I have not gone through the cases I have on the sales tax, and I would not tell you and how close that to my skin, because I literally felt the desperations for the spouse. And then it is really not something they were trying to cheat the government, right? Our folks just didn't really speak that great of English. They didn't understand. They're the pioneer for that kind of business here in the state. So it's really had a lot of reasons to say that the non-collect, the sales tax was not done intentionally. But not done intentionally is not excuse for not paying sales tax. So trust me, I tried it, so it doesn't work. And you still have to collect it and pay it. All right, so with that said, I want to say that we finished today's talk, and this is our 3 p.m. webinar, and I love to see you here. I really appreciate you. Stick with me. Actually, during this whole talk, there's only one person left, and I am so proud of myself and proud of you. And please email Catherine at communitycpa.com for topics that you are interested in. And also you can call us. Do you know that we open on Saturday regularly? Our Minnesota office and our office in Des Moines, Iowa, we open 6 days a week. If you pick up the phone call us right now today. Someone will pick up the call because we are working on Saturday. I'll talk to you again, and hopefully, and you learned one or two, and give me a thumb up,